You might not know it, but the world's financial system is on the edge of a cliff. Did you know global debt has hit over $300 trillion, a level higher than 350% of global GDP? That's 3 times the total value of all the goods and services produced by the entire world. And the worst part? Ray Dalio, one of the most respected investors alive, predicts that this massive debt will trigger a global economic disaster. But here's the thing. Dalio isn't just another economist throwing out scary predictions. He's been right about major market crashes in the past, and his track record speaks for itself. From the 2008 financial crisis to the rise of China, Dalio's insights have shaped the way we think about money. In this video, we'll dive into his most shocking predictions yet. He warns that the US dollar could collapse, the bond market is a ticking time bomb, and China is set to dominate the global economy. Sounds terrifying, right? But don't worry, Dalio also shares how you can protect your investments and profit from this upcoming crisis. Stay tuned, because what you hear next could change the way you think about your financial future forever. Chapter 1. The Calm Before the Storm. Why Dalio's warnings are not just hype. Ray Dalio has built a reputation for accurately predicting economic downturns, and his most recent warnings should not be ignored. In his book Principles for Dealing with the Changing World Order, Dalio discusses how global power shifts often lead to financial crises. What makes his predictions stand out is his ability to connect political, economic, and historical patterns. He's not just looking at short-term market trends, he's observing long-term cycles that span centuries. Dalio's insights about the current state of the world economy are especially alarming. He predicts that we're nearing a moment of reckoning. This isn't just about inflation or interest rates, it's about a bigger, systemic shift. He believes we're entering a period of stagflation, where inflation remains high, but economic growth stalls. This could leave value investors with serious risks to their portfolios. According to Dalio, when these long-term cycles collapse, the financial world changes forever. The signs are there if you look closely. Historically, when a country is deeply in debt and losing its global dominance, it leads to a crisis. The US dollar, which has been the global reserve currency for decades, may no longer hold that title. Many people assume that Dalio is simply an economist, but his true strength is in pattern recognition. In the 1930s, the world saw similar warnings about economic collapse, predictions that came true. Now, Dalio argues, the debt levels in the US and other developed countries mirror those from that time. In fact, global debt has ballooned to over $300 trillion. That's about 350% of global GDP. This level of debt has never been sustainable long-term. Value investors need to start thinking about how these shifts will affect their portfolios. Stocks that were once considered safe may no longer be so. Dalio believes the markets will react violently when these shifts happen. If you don't prepare now, you might find yourself left behind. Chapter 2. What the Fed doesn't want you to know about inflation, and why it's coming for your portfolio. Inflation is a silent killer for value investors. It slowly eats away at your purchasing power, making it harder to generate real returns from investments. Dalio has always been outspoken about the risks of inflation, and his most recent warnings are chilling. He believes inflation is going to be much higher and more persistent than most people think. One of Dalio's most important insights is how inflation affects asset classes differently. For example, while stocks might seem like a safe bet, Dalio warns that inflation can erode the value of your investments, especially in the long term. While the stock market has historically provided strong returns, inflation can destroy the purchasing power of those gains. In fact, Dalio points to the 1970s as an example, when inflation soared above 10% and wiped out much of the purchasing power of the average investor. Dalio also talks about how the Fed's policies have made inflation harder to combat. Since the 2008 financial crisis, the Federal Reserve has kept interest rates low, encouraging massive borrowing. This may have been necessary to prevent a depression, but it also created an enormous debt bubble. Dalio points out that when a debt bubble pops, it leads to inflation, which in turn increases the cost of living for everyone. But how does this affect value investors? Dalio's answer is simple. Prepare for a shift in the types of assets that perform well. Traditional bonds, for example, are a safe haven during market volatility, but Dalio warns that the bond market is a bubble waiting to burst. If interest rates rise to fight inflation, bond prices could fall dramatically. For value investors, this is a wake-up call. Instead, Dalio suggests diversifying into real assets, such as commodities and real estate. These have historically done well during times of inflation. Gold, for instance, has always been a hedge against inflation. Dalio himself recommends holding a portion of your portfolio in gold, especially in times of rising inflation. This strategy has stood the test of time. In the 1970s, gold prices skyrocketed as inflation surged. Dalio also stresses the importance of international diversification. U.S. assets may not perform well if inflation continues to rise. Looking abroad for investment opportunities in emerging markets or commodities can help spread risk. Chapter 3. The Bond Bubble. Why Ray Dalio believes we're sitting on a ticking time bomb. Bonds have long been considered a safe investment, especially for conservative value investors. But Dalio believes we are on the verge of a bond market collapse that could send shockwaves through the entire financial system. The bond market is huge, over $130 trillion globally, and it's where many investors have parked their money for decades. But with interest rates rising, this market is vulnerable. Dalio's analysis of the bond market centers around one key idea: bonds are inversely related to interest rates. When rates rise, bond prices fall. For years, central banks kept interest rates artificially low. This made bonds look like a safe bet, but now, as inflation rises, rates are likely to increase. That means bond prices will fall, and many investors will face significant losses. What makes this scenario even more dangerous is the sheer volume of bonds in the market. In the US alone, government debt has skyrocketed to over $33 trillion. The Fed has been buying bonds to keep interest rates low, but as inflation accelerates, they'll be forced to raise rates. This is a scenario Dalio calls a ticking time bomb. For value investors, this poses a serious problem. A lot of traditional portfolios rely heavily on bonds for stability and income. But when bond prices start falling, it could lead to a major loss of wealth. Dalio has warned that the global bond market could collapse, and if you don't prepare, it could wipe out your portfolio's value. But how can value investors protect themselves? Dalio suggests moving away from long-term bonds, which are the most vulnerable to interest rate hikes. Instead, focus on short-term bonds, which are less sensitive to rate changes. And don't put all your money into bonds. Look to diversify with other asset classes like commodities, real estate, and stocks in sectors that do well during inflationary periods. Another strategy Dalio recommends is to invest in assets that can act as a hedge against inflation, like gold and other precious metals. These have a long history of holding their value during times of economic turbulence. If the bond market does implode, assets like these could help shield your portfolio from the worst effects. If you're finding this information valuable, don't forget to hit the subscribe button and turn on notifications so you can stay updated with all our future videos on protecting your wealth. Chapter 4. China's Rise and America's Fall. The Big Shift in Global Power, and How to Profit. Ray Dalio believes we're entering a new era of global power shifts, and it's not looking good for the United States. Over the past century, the US has been the dominant superpower, but Dalio argues that China is on the rise, and this could spell trouble for American investors. In his book Principles for Dealing with the Changing World Order, Dalio explains how major shifts in global power often lead to financial crises, and this one may be no different. China has grown rapidly, both economically and militarily, over the last few decades. It's already the second largest economy in the world and is set to surpass the US in the coming years. Dalio points to the way China has been building global alliances, particularly through the Belt and Road Initiative. This strategy is aimed at strengthening China's economic influence in developing nations and making the yuan a more important global currency. For value investors, Dalio's warning is clear. The rise of China could lead to a decline in the value of the US dollar. As China gains economic power, it's possible that more countries will start to move away from using the dollar in international trade. This shift could devalue the dollar and create huge disruptions in global markets. So how can value investors profit from this change? Dalio suggests that one of the best ways to prepare is to diversify internationally. Don't put all your eggs in the US basket. Invest in emerging markets, especially in Asia, where growth is expected to continue. Dalio also recommends looking into commodities, which can be a safe haven during times of global economic instability. Dalio also highlights the importance of understanding the changing dynamics of global trade. If the US loses its status as the world's primary economic power, it could lead to a shift in global supply chains. Some sectors in the US might suffer, while others in China or other parts of the world might benefit. For example, industries like technology, green energy, and infrastructure in China could experience significant growth. Dalio's advice for value investors is to take a long-term view and be patient. Economic shifts like this take time to unfold, but those who are prepared will be in a strong position to benefit. Chapter 5. The End of Dollar Dominance. Why Ray Dalio thinks a new global currency is inevitable. Ray Dalio's concerns about the US dollar's future should make every value investor sit up and take notice. The US dollar has been the world's primary reserve currency for nearly a century, but Dalio believes its dominance is slowly coming to an end. In his book The Changing World Order, Dalio argues that the rise of new global powers, especially China, signals that the dollar's days are numbered. Dalio points to historical patterns of currency shifts. In the past, when a nation's power declines, its currency tends to lose value. We've seen this with the British pound as the UK declined in global influence, and now it looks like the same may happen to the dollar. As more countries turn to alternatives like the Chinese yuan or even digital currencies, the dollar could face a serious decline in value. Dalio isn't just speculating. He has backed up his theory with data. According to the International Monetary Fund, IMF, the share of global reserves held in US dollars has been steadily falling over the years. In 2001, the dollar made up 73% of global reserves. By 2023, that number had dropped to about 58%. It's a clear sign that the world is moving away from the dollar. For investors, the end of dollar dominance could create significant challenges. The value of dollar-denominated assets could decline, making traditional investment strategies less effective. Dalio recommends diversifying your portfolio to protect against this risk. One of the best ways to do this is by investing in foreign currencies and assets that aren't tied to the dollar. Dalio also suggests that value investors should look into commodities, such as gold and silver, which tend to perform well when the value of a currency is in decline. Gold, for example, has been a store of value for thousands of years, and Dalio believes it will continue to serve as a hedge against currency risk in the future. The key takeaway for value investors is to avoid relying too heavily on US dollar-based assets. Instead, look for opportunities in foreign markets and commodities that can help protect your wealth from a potential dollar crisis. Chapter 6. How to Build Your Fortress. Ray Dalio's 3-step guide to surviving economic collapse. Ray Dalio's predictions about the future of the global economy might sound terrifying, but he also offers practical strategies to help investors weather the storm. His 3-step guide to surviving economic collapse is simple, but powerful. It's all about diversification, risk management, and being prepared for the unexpected. Dalio's first step is diversification. He argues that a well-diversified portfolio is the key to surviving a crisis. Don't put all your money into one asset class, one sector, or one country. Spread your investments across different asset types, including stocks, bonds, commodities, and real estate. This way, when one asset class suffers, others may do well. Dalio also suggests diversifying across regions, especially into emerging markets, which could benefit from the shift in global power. The second step Dalio recommends is risk management. This means understanding how much risk you're willing to take and making sure your portfolio reflects that. Dalio emphasizes the importance of understanding both the risks and rewards of your investments. He suggests looking at how your investments might perform during different economic scenarios, such as inflation, deflation, or a market crash. This type of preparation can help you avoid major losses when a crisis hits. Finally, Dalio advises being ready for the unexpected. Economic collapses are often triggered by unpredictable events, like a war, a pandemic, or a financial crash. Dalio suggests that investors keep some cash on hand and have a plan in place for unexpected events. He also recommends staying informed about global trends and being flexible with your investment strategy. Dalio's advice isn't just for investors with millions of dollars. His principles apply to anyone who wants to protect their financial future. The key is to be proactive, not reactive. By diversifying your portfolio, managing risk, and staying prepared for the unexpected, you can survive even the most severe economic challenges. In the end, Dalio's strategies aren't about avoiding risk altogether, they're about managing it wisely. With the right preparation, you can navigate the storm and come out ahead, no matter what the future holds. If you found this video insightful, make sure to subscribe and turn on notifications. You won't want to miss out on future content that will help you navigate the economic challenges ahead.